Hey there, everyone. Ugly day in the market yesterday over at the Discord. However, we were crushing it. I'll tell you more about that soon, about the different wins that we had. I went 3 for 3 in my trades yesterday. Today, I want to look at gold prices and see, well, where exactly we're finding resistance. And I think I shared that chart yesterday. I definitely shared it over at the Discord. I also want to talk about Bitcoin because I got some interesting technicals, some things surrounding gold and Bitcoin that can tell us a little bit more about the near-term price action. And then also, I want to take a look at Dollar Tree because I do think, especially because of what we're also seeing in the pre-market this morning, along with my other technicals I have on it, that I still think it's a very interesting play for us. So with that said, let's get into the charts and we'll talk about it. So popping this up here for you, the very first thing, let's just go with Bitcoin. And I wanted to show you just these peaks that we have. Let me actually take down the exponential moving averages. We don't need them right now. 88.7, 88.5, and then 88.8. Today, we actually hit a higher high than what we had the 3 previous highs going all the way back to the 24th of March. And then the next high that we have before that, this peak actually happened back here on March the 2nd. So we actually have a higher high, but we do want to close higher. This orange line that you see coming across is the 200-day. We have bullish momentum, decent volume yesterday, today pushing us up above the 200-day, but we really want to watch where that close comes in. And it would be nice to see some more volume support besides what we've gotten so far. We actually had it pretty decently on April 7th and then also April 9th. While the market was down yesterday, Bitcoin was up almost 3%. So it was nice to watch that go. Now, why is that? Honestly, I think it's because gold prices have run up so much. I think Bitcoin is the next place people are going to kind of diversify and kind of hedge different things like inflation, or maybe it's dollar weakness, you name it. But I think that Bitcoin is that place where we're seeing some of that money potentially go. And it is looking a little bit like an inverse head and shoulders that would make this a neckline right around here, around the mid to high 88s, if you will. And if I put up some of the other technicals that we have on here, what you'll see for this, and I know that there's going to be a bit of a mess showing up on your screen in a moment here, but what you'll see is this cluster of resistance starting to build up right around this area up here. And so for that happens right around 89.6. If we can make it above that, that takes us up to about 92,000. We have room up above that till about 98.4. So we want to be watchful for that. Now for gold prices, I shared this yesterday, and yesterday we were on this candle. Today we're on this candle because we're looking at the daily chart here for the gold spot versus the US dollar. And what we see is that we're retracing a little bit off of this resistance today. So far getting that rejection, the RSI up over 78. If we go out to the weekly numbers to look at that for the RSI, 83 is the RSI on that one. In the monthly chart on here, we have peaked the highest level that we've had. Well, I said yesterday, January 1980. February 1980 was also higher, but January 1980 was the actual peak that we had going back. There we go. There you can see that peak in this bottom left-hand corner for the relative strength index. So February of 1980, we were at 87.7, almost 87.8. We're at 91 for January of 1980, and we have not hit that sort of peak on a monthly basis for RSI until, well, now when we're at 86.79. So the RSI starting to get strung out on gold a little bit. Now, mind you, just because we're hitting resistance, just because we're overbought, doesn't mean that we're done running. But if we go and we look at the dollar strength index that we have right here, and you can see the weakening dollar that we've had since we peaked out back in September of 22. This is a monthly chart that we're looking at, kind of chopping sideways. And then when we look at December, January, February, March, and now April, dropping down, we've almost made one full movement downward from these other peaks. So let me go on down to the daily chart so you can see it better here. There we are. So when we look at the Fibonacci extension, the drop that we've gotten going back to January 13th until, let me see, we bottomed out in 18th of March, and then we retraced back up a little bit for the 26th of March. We've almost repeated this movement down here, which means that we could potentially be seeing very strong support happening in this area of support that we're at right now. So for gold prices, against a weakening dollar, you would have increased gold prices, which is what we've seen. However, if the dollar is currently finding support and then bouncing a little bit, that could hold back on those gold prices a little bit. Also, if we are experiencing less capital flight, this is the 10-year treasury yield that we're looking at for the U.S. treasuries. We're in an area of resistance right now at about 4.418%, and the top of this is right at about 5%. So we want to be watchful for that because we are in that area of resistance. And once again, this is a monthly chart, so you can see that resistance happening, that we did break back up above it when we go back to April of 02. before rapidly declining. So we also have some bearish divergence between the yields going up and the momentum for them dropping. So there is a potential that we are seeing some signs that the dollar might strengthen a little bit from here, that the treasury yields could come down, which means that bond prices are becoming attractive enough with a high enough incentive to buy those bonds, that maybe we get that in something like a deal between US and China would be something to rapidly probably draw down some of these treasury prices as well, that we would experience less of that capital flight and we start to see some inflows coming back to the bond market. So the last thing is SPY. When we look at the monthly chart, so tracking the S&P 500, we have once again bearish divergence, which I can really emphasize here if I zoom out more, so you can see the price is rapidly increasing while the momentum has been declining from 2018 until now. And what else we can see, let me bring this back, and I really want to increase the size of that RSI for you so that you guys can see that a little bit better. So there's volume, and right here's momentum. So there you can see that. One thing else I want to point to you, and this chart only goes back, at least in terms of the RSI, back to 1994, is that this part right here that we were down below was that dot-com bubble where the market sold off. And the market sold off from September of 2000, and then we bottomed out in about December. It was 2 years later, September of 2002. And then the Great Recession was the other time that we spent a lot of time down below 50. So down in the bearish momentum territory with two massive sell-offs and just horrible and ugly times. And where do we find ourselves right now? We're at 49.82. So we are below 50, which is a bearish thing. But notice that even throughout 2022, we did spend some time down below. That could mean that we could drop further from here, but honestly, I think right now we're missing some catalyzing event in order to make that happen. We had some evidence of runaway inflation. We also had tighter financial conditions coming from the Fed. And so right now, what are we seeing? Well, we're in a low liquidity environment, which could bring us to a lot of volatility. So we have to pay attention to that. But without something to really draw us down and keep us down, we could see some recovery in terms of monthly momentum. So maybe, a month or two, maybe we get pain, maybe we bounce from here like we saw back here. We go to 2015, 2016, but with a catalyzing event in place, that could be the thing that pushes us down below that 50 and keeps us there for a while. So if that does happen, if we get pushed down below the 50 on this, and if we see that we drop out of this bull channel that we've been in for a while here for the S&P for years on end, there we go. If we get that catalyzing event that pushes us down out of that, down below this 50-month moving average that we have on here, gold prices, I think, would move up on us. Without that stuff happening, I think we're going to be hard pressed for those gold prices to move up from where we're at right now. So gold in the near term, what do I think is going to happen? In the near term, I think we're probably going to retrace a little bit, probably soften a little bit. Maybe we come down and test this floor. We're going to have to watch, but just this is a free rise and also a free fall area that's in here right now. And so expect a little bit of retracement. I'm not saying that nothing's ever a guarantee, nothing's ever that simple, but the evidence that we have suggests that for right now, this is a current peak, and then we have to watch and see what happens next for us. I think the next thing that happens is that we start to look for that floor and we kind of maybe flounder a little bit, but we have GDP coming out next week. Just so you know, on the 30th of April is when we get that advanced estimate for Q1 GDP. And then after that, the Q2 numbers start to come out. And if they come out negative and Q1's looking negative, well, then what that can do for us is that can actually be like, well, hey, that would be our 2 quarters that would say that we're in a recession. And so that narrative could play out. Michigan consumer sentiment's another thing to watch out for. We get that final number coming up pretty darn soon here. It's usually the last Friday of the month, so that would be this coming Friday. So just some things to watch out for. Gold prices probably holding steady for right now, maybe pulling back a little bit. I don't know that we punch through this resistance to make it up to the next resistance, which by the way is 3673 up to 3700. So if we're able to get up above there, that's what you can look for next. If not, maybe we flounder around 3400, maybe we retrace back down to about 3300 for those gold prices. I do think that there is some near-term easing that might come for those gold prices, given the other evidence that I've laid out in this video. I said that I would share Dollar Tree here for you. Dollar Tree, check this out. We got a gap to fill up to 81.65. In the pre-market, we finally broke up above 80, but we got to hold it. And then the next gap goes up till 94.20. That one, by the way, starts at about 88.89 with some resistance in between. So if we look a lot left, you can see that we are near a bunch of support and resistances, historically speaking, from the current closing price and pre-market price that we have. So I'll probably open up another call option today if we can open up above 80, because we should see a $2 appreciation on that, which would, be about 2 to 3% up from where we're at right now. And maybe even I'll let it ride a little bit longer. We'll see. With this market being as choppy as it is, I tend not to hold on to it too long. So far, the Qs this morning were tracing back up a little bit. IWM, the Russell 2000, were tracing back up a little bit. And if I go to my friend the SPY, go to the daily chart on this, once again, giving a little bit back from what we had from yesterday. And guys, remember what I said about the Discord yesterday. I went 3 for 3, 2 intradays that were on purpose with some 0 DTEs. One was 9% until I got stopped out, 9% profit, 37.5% profit until I got stopped out on that one as well. And then the other one was an intraday trade, but unintentionally, and that was on Dollar Tree. That one, 20%, closed it out for the day. Didn't want to sweat the overnight risk, especially because being below 80, closing below 80 is something that's troublesome, because that's where the selling pressure comes in for Dollar Tree. So if we can get up above 80, then that selling pressure comes off up until we get to that first gap fill at 81.65. If you guys want to see more of my commentary that you've seen on here, plus, like I said, even more, as well as the other panel experts, the other things that they're buying, selling, trading, talking about, crypto, stocks, bonds, you name it, and also be a member of a community with thousands of members already, a highly positive place, everybody there supporting each other towards financial freedom. The link's in the description. Sign up for the earner tier so you get access to all the products and services that are there, offered, ready, waiting for you. The bread bot, which tells you when those massive swings are coming. There's AI tools, there's advanced charting tools, and like I said, that community plus the panel experts. It really does seem as the products and services are endless. Sign up for the earner tier so you get unrestricted access. And if you guys want to learn about technical analysis, learn about how to trade using those technicals with the bread recipe that I personally use. It's what I used yesterday on those scalps. And it's also what I used on the Dollar Tree play, believe it or not, to find my entry for that as well. And then you guys can learn about that, plus options trading by using the link in the description for Stockmo Academy. If you bundle the courses for options and technical analyses, if you do that, you save a ton of cash. Code word doctor, DOCTOR, is going to save you even more. You can even buy the courses individually if you want to. The code word doctor is still going to work. Guys, thank you very much for watching. I really do appreciate it. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.